Hey folks, it's Simon here with your Tao Daily Update for market close Wednesday, 20th of August 2025. Wednesday saw markets suffer an early session sell-off with a pretty good recovery. S&P closed down about 0.25%, Nasdaq was down about 0.6%, and it's leaving several major sectors and indices at fairly critical levels. You can see here SPY is retesting its breakout level. Now, this is important because when a symbol makes a new all-time high, what it's not allowed to do is close back below that level, right? Because if it does, this then looks like a false breakout, and anybody who bought the breakout will be thinking, that breakout didn't work, I'm going to have to cut my losses. Stop losses get triggered, creating basically instant downside liquidity. That's something to keep an eye on. If we look at the Nasdaq, very similar set of circumstances. I can draw a little arrow line there as well, and obviously this breakdown has been somewhat more pronounced. If we look at the semiconductors, it's always worth a look because semis tend to be a leading indicator. That was the previous all-time high in semis, didn't make a new high for a while. Now this line, if you look at how this line has been behaving, we broke through, tested it there, test, and now we've got another test here. And we've also got the 50-day SMA looming underneath as well. Semiconductors testing a really important level here. They need to hold. If semiconductors roll over and die, that's going to be no bueno for the market. Mag 7, similar. If we just zoom out a little bit, that was the previous all-time high. Here we broke out, and SPY, this is the first time we're retesting that breakout level, really. Again, important level for Mag 7, for semiconductors, and for SPY, and the Qs look they've already broken through to the downside. There are many ways to measure market breadth. Two popular ways are looking at the number of stocks or the percentage of stocks above their 20-day moving average. 20-day moving average denotes a short-term uptrend. A stock that's above its 20-day moving average is in a short-term uptrend. Now, what we've seen is a divergence in breadth using this measure here. As the SPY has gone on to make new highs, the percentage of stocks trading above their 20-day moving average has continued to fall. Why might this be significant? Because previous breadth divergences, this one, have preceded market sell-offs. We had a big one here, and then we had a pretty big sell-off as well. We could be looking at another move to the downside with September seasonality looming. Percentage of stocks above their 50-day moving average. This is more of a medium-term uptrend measure, but again, we had a breadth divergence there, big sell-off, breadth divergence here. We haven't had a big sell-off yet, but maybe there's one coming. We're seeing risky assets, Bitcoin. Let me just get to a clearer chart. Bear with me 2 secs. If we look at Bitcoin, that's been selling off pretty hard, and it's lost trend structure. It looks like it's broken this trend line. We've got 2 consecutive closes below the 50-day simple moving average. It looks the path of least resistance for Bitcoin, at least in the short term, is lower. Now, look, I'm a big fan of Bitcoin. Doesn't mean it's got to go up every day. I would certainly be setting my sights on lower prices before adding to that one. The VIX hasn't really woken up. We've got Jackson Hole on Friday. We had some Fed minutes come out on Wednesday that was certainly more hawkish than probably what the market was expecting. And if Powell gives a hawkish comment on Friday at his Jackson Hole speech, we could certainly see some disappointment from the markets, which are currently pricing roughly 85% chance of a rate cut next month. The stock market still loves a rate cut, and if we do get some disappointment on that front, that could tie in very nicely with what is normally quite a bearish month for September. September is, from a seasonal perspective, the worst month of the year for the S&P 500. And rallies that are sustainable are ones where everything is coming together in concert and working together. We don't really have that at the moment. Risk is certainly starting to creep with the market's reaction to Friday's Jackson Hole speech by Jerome Powell, proving to be fairly pivotal for near-term direction. That's a wrap for today, folks. I hope it helps. I'll catch you next time. Thank you.